Welcome to the Apartment Investor Pro podcast, where we talk about how to be a more successful multifamily investor with a focus on using technology to boost your business. And now your host, Todd Heitner.
Welcome to episode 5 of the Apartment Investor Pro podcast. The topic of this episode is networking to find passive investors. Today I'll be interviewing Travis Watts. Travis is the Director of Investor Relations at Ashcroft Capital. Ashcroft is the company that Joe Fairless co-founded that he uses to invest in multifamily deals. So basically, Travis's role is networking to find new investors for Joe's company. Travis is a full-time passive investor as well. He's been investing in real estate since 2009 in multifamily, single-family, and vacation rentals. He's invested in over 30 passive syndications between 14 different firms. What's cool about that is that Travis can talk about investing from both sides. He's a passive investor himself, but he also actively finds investors for deals. Travis now dedicates his time to educating others about investing and sharing passive investment strategies to help others achieve and maintain wealth in real estate. Here are just a few highlights to watch for. How many networking conversations do you need to have before finding an investor? The profile of a typical investor, which is different from what he expected. How to cut the learning curve by decades if you're new to multifamily investing. Let's get right into the interview. All right, so today I have Travis Watts with me. And so Travis, thanks so much for coming on. How are you today?
Doing well. Thanks so much for having me, Todd.
Great. Yeah, I appreciate you coming on. And so you handle investor relations for Ashcroft Investments, right? Can you tell us a little bit about your role there?
Sure, absolutely. I'm the Director of Investor Relations with Ashcroft Capital, co-founded by Joe Fairless and Frank Rossler. We're New York City based. We're a multifamily investment firm. So do a lot of deals out in Texas and Florida primarily. They're B-class value add deals. We partner with accredited investors looking to participate in private placement opportunities or syndications.
Awesome. And so what prompted you to decide to join Ashcroft Capital, to join the team?
Yeah, good question. So I've actually been an investor as a limited partner with Ashcroft for many years. I'm in 9 or 10 of their deals at this point. And it's just a company I've really admired from the get-go. Communication style, transparency, reporting. You know, I had laid out years ago with my wife, before we were married actually, what my investing criteria would be, what would work for us long-term, what kinds of deals we were looking for. Ashcroft Capital is just one of those groups that really checked all the boxes for us. So what happened was I'm going around to conferences as just an individual passive investor, trying to meet people, trying to find new deals, just trying to network, right? And that's my favorite way to network is face-to-face in person. And back in the day when we used to actually have conferences, that was my primary go-to approach. So what happened was Joe had a newborn daughter, his daughter Gwen, about a year ago. And leading up before that, Joe was on the road a lot more, doing conferences and speaking engagements and all this kind of stuff. Whereas he's now shifted to wanting to be at home, rightfully so, with his daughter. So in that transitioning process, I had reached out to Joe to say, I really admire what you guys do at Ashcroft. Obviously, I'm a big investor with you guys. And if there's anything I could do to add value to your team, whether it full-time, part-time, whatever it is, I don't know. Here's my skill set, my background, and what I would love to do and how I'd love to, work with you guys. And I did that with a little iPhone video message on a Saturday. And Joe's really good at getting back with people. He got back with me like an hour later and says, "Oh my gosh, that was so thoughtful. That's so cool. And thank you. But unfortunately, there's nothing that we have for you right now." So I'm all, bummed and shut down. Like, I don't know what I'm going to do now, not that I had super high hopes for making that work, but it was really what I wanted to do. And so about 2-3 months later, Joe reached back to me and said, we're actually hiring now for an investor relations role. It involves a lot of travel. It involves going to conferences and all this stuff, which is what I'm doing anyway, and trying to help spread the word about passive investing and about private placements and just what this is all about. There's not a lot of great education out there. It's certainly gotten way better since 2015 when I got started in it. And so I just kind of want to be one of the folks, adding that value and transparency to others. So I joined forces so that, one, I could continue doing the conference stuff. I could share what's worked for me with others, and I could meet a lot more people under a national brand. And so it's been a win-win. And I love it. So that's kind of how we connected.
Okay, cool. And so just so I'm clear in your role, then you basically go out and you find new potential investors and kind of bring them back to Ashcroft, and then someone else kind of takes over the building that relationship, I guess, and kind of getting them onboarded and all that. Is that right?
Yeah, so it's a pretty big team really at Ashcroft. So I'm director of investor relations, more externally focused, networking nationwide now since lockdown through social media and LinkedIn and Bigger Pockets and all these types of outlets, right? And then we have an internal investor relations. His name is Evan Pulowski. And so Evan's kind of the detailed deal guy, right? So if you want to dig deep into a specific deal, how did you underwrite this, why that, that's kind of your investor relations point of contact there. If you're just kind of learning about passive investing or looking for other groups to diversify with as an accredited investor, I'm kind of probably that first approach that you might reach out to or come across through social media or a conference. And yeah, I mean, it's a numbers game. Not everybody's accredited. Not everybody's, qualified for this stuff. Plus, it's not right for a lot of folks anyhow, based on their age, their risk tolerance, their net worth, whatever it may be. So yeah, I love networking. I speak with 18-year-olds buying their first house. I speak with 70-year-olds trying to figure out what passive investing means or how they're going to retire, and everyone in between. So yeah, that's kind of the process and how that works.
Okay, cool. So you're going out and trying to find new investors. So what are your favorite ways then to find new investors for Ashcroft?
Well, I would say it was conferences. I really do enjoy conferences. It's just such a cool environment because this is kind of a niche thing, I mean, real estate investing in itself kind of is, but when you really filter down to multifamily and apartments and syndications, it's a small group. But that being said, I mean, I just love immersing myself in that environment. You always meet people that are 5, 10, 15 years further along than you are. And then, of course, there's a lot of new folks that are there for the first time that have never heard of this before. And so you get to kind of be that mentor, in a sense, that guide. I try to just be a free resource for people. So conferences were, now that a lot of conferences have gone, digital and whatnot, I'm missing that networking piece. That's really what I loved about a conference, is just mingling in between the speakers and before and after and the happy hours and the whole thing. Right. So you kind of lose that element through a digital conference. They're fantastic for education.
Right.
But as far as meeting people, much harder. You might have like a Facebook group or something, which is okay, but it's not the same. So now it's I have people reach out to me on Instagram, on Bigger Pockets, on LinkedIn, just endless amounts of places, and so it's just interesting how each different sector brings in usually a different type of, demographic and type of person. So it's kind of cool just to be experimenting with that for the first time. I've never really been a big social media guy before.
Yeah. So could you dig a little deeper on that? Like you said, there are different demographics from each source. Like what do you find then from different sources that?
Yeah. Just a simple example would be most of the folks reaching out to me through Instagram are usually say 18 to 25 and more interested in just the idea of what does passive investing mean, and not that they're necessarily accredited or looking for private placements, but just interested in that. So what I post mostly to Instagram is a lot about self-education and reading and resources and books and, this type of stuff, right? Kind of the hustle and whatnot. So that's kind of my focus there. Through Bigger Pockets, it tends to be a more sophisticated crowd. I'd say the age, shifts from, 30 to 60. So that's kind of where you see a lot more. Same thing with LinkedIn, by the way, a lot more industry professionals that are interested in private placement stuff. So as I put out blogs on there and various posts, I get a lot of people reaching out specifically about Ashcroft, because I'm obviously tied to Ashcroft on there under my signature line. And so a lot of people have questions more pertaining to Ashcroft on there.
Okay. And do you use Facebook too, or is that in the mix?
I do. So Facebook's, man, it's a wild card. I can't say it's been too effective for anything, quite honestly. But, I've had everything from, the 18-year-old to the 70-year-old and everything in between. And it's just hit or miss. And my content is just random on there. What I post a lot on Facebook are podcast interviews, for example, that I do. So more midterm length, right? So things that are maybe 30 minutes to 60 minutes go on there. Anything over 30 minutes is YouTube. And, so I just try to base it according to what the platform is designed for.
Okay. So the demographics are kind of all over the place, but so like but for finding investors, then you found that LinkedIn and bigger pockets are more effective for that.
Yeah, I think all in all, I don't have the stats or the facts, but if I go back and I look at all my conversations and the people that were most interested in private placements that were accredited, yada, yada, they were probably those two platforms as far as online. But again, the best that I've ever come across has been in-person conferences, face-to-face. That's my number one place where I've ran into that demographic.
Yeah. Okay. Great. Yeah, I know there's nothing quite like being in person, shaking hands, seeing eye to eye. So maybe we could just talk a little bit about the live events like that, even though they're not happening right now as we're recording, but assuming they will resume at some point in the future. So like when you go to an event like that, well, first off, of the different events you go to, do you find that some are more successful than others, or like which ones are your favorites to attend for maybe attracting new investors?
Yeah, for sure. So the way I started with events in general was local real estate meetups. And so everything's kind of pros and cons, right? So the pro is it's convenient, it's free, it's usually in a 5 to 10 mile radius. That's great, right? And then you get to meet face to face. Those are the pros. But the cons are usually there's not more than, say, 20 people that show up to these groups. So you're very limited on who you network with. It's typically the same 20 people that show up to each event. So after you've met everybody, it's kind of, you've met everybody, right? And then a lot of them are for a very specific purpose. So it's like getting investors to invest with their particular model or program or something. So some kind of turn into sales pitches, which I don't particularly care for. General rule of thumb on live events is the more you pay, the less salesy it is. So some of the best events have been the $1,000 and $2,000 price tags, and then you're really not pitched anything. It's just pure networking and education. And that's really what I love. Additionally, you want to look for a very specific target to what you're looking for. So the best conferences in my experience have been like multifamily or apartment investing conference, right? Not real estate 2020, because then you run into realtors and brokers and, all kinds of folks that they're not investing and, or a lot of sales stuff and things like that. So, honing in to your specialty is usually best. And yeah, there's some that have really been, a lot better than others. That's the other thing is, the track record of the conference. Is this the 10th time they've put this conference on, or is it the very first one? Because the first one's usually a little shaky. They're still working out the kinks. Understandably, not saying don't go to them, but it's noticeable.
Yeah. And with the meetups, have you ever hosted your own meetups, or you just primarily went to other ones that were someone else hosted?
That's a good question. It was kind of my intent, right, was to first attend these meetups, see what they're all about and how they work, and then launch my own, which I've yet to do. Many reasons. One, I travel a ton, so it's very hard for me to stay in one place and always be dedicated to our monthly or our bi-weekly meetup, whatever it may be. It's a lot of work. I don't want to ever put something together that seems salesy or whatnot. And again, you tend to get the same people showing up over and over, which is great. But, so I prefer to attend others. It gives me a lot more flexibility. I'm not obligated to show up to them. I can quit showing up forever, and so kind of selfish, but yeah, that's a good question. It can be a great strategy. I know, like Joe Fairless at Ashcroft, he has, I think it's the biggest, real estate meetup in maybe Ohio, I don't know, but it's over in Cincinnati. And, he has great success with that. He has a ton of people. It's fantastic. He loves it. He enjoys it. I don't know that I would personally. So everyone's different.
Right. Okay, cool. So let's say you go to an event. Can you kind of walk us through how you meet people and what you say to them to kind of gauge their interest and all that? Yeah.
Yeah. So my thing is kind of twofold, right? I am a full-time passive investor myself, investing in private placements and syndications primarily. And then there's Ashcroft Capital, right? And explaining kind of their model. So I try to be as fluid and authentic and flexible as I can. So I'm never coming at it from a sales perspective or, hi, I work at Ashcroft. Do you want to invest in a deal? Like I'm never taken that approach. It's always first just learning about the other person. Hey, I don't think we've met. What's your story? What do you do? Boom, right? There's your icebreaker. And then getting into, what excites that person, what their goals are, their ambitions, and you learn a ton in 30 to 60 seconds, right? If they're diehard one direction or another, you embellish that direction and try to learn what you can from them. And if they say something like, I've been trying to get into multifamily investing, trying to learn it. I don't know any groups to invest with. I've never looked at deals. Then I can be a resource for those types of people. And anyone else is just great to meet you. And, let me know if I can help you in any way and moving on. So this happens before a conference, during the lunch breaks, the networking breaks, after the conference. But that's the most fulfilling part. The education, once you have it, you have it. So I'm not so much there anymore for the education of a conference. I'm there for the networking. And again, just to reiterate, not to be a salesperson, not to try to, I'm going to grab some investors here. That's never my intent. I just love meeting people and sharing and just trying to really, I just give my time back to others, what I've learned and experienced. And I try to learn equally from others, kind of what they're doing. Maybe there's something I should be doing that I'm not, so I always pick up 3 or 4 things that way too.
Nice. Okay. Yeah. And so what I take away from that too is then not necessarily going into the conversation with an agenda, but like just authentically trying to meet people, listen to them, like listen first before you speak, try to find out something about them. And then also I appreciate too what you said, like seeing if you can help them in some way. So being of value, providing value to other people, even if it doesn't help you necessarily personally. Yeah. And that makes sense that, cause you never know where these connections could lead. You could, even if somebody's not going to be an investor, who knows what other benefit you could receive from that relationship. So.
Oh yeah. I've been introduced to resources, books, sponsors, that I didn't know existed, that were in a niche I wanted to kind of experiment with. And it's just been crazy. I've been invited to not only speak at various real estate meetups, especially during lockdown here, but it's hard. It's an abstract, it's like a compounding thing. You have all these conversations and you think, boy, that was, maybe a waste of time. Right. But then a year later, you're like, holy crap, all these people reached out and I got all these invites and now all this stuff's happening. And it had it not been for all those conversations put in up front. So yeah, to your point, you never know where something's going to lead for sure.
So we're going into this. I know, people would love to have every conversation lead to someone passively investing with them, but what can you talk about, like realistic expectations from it? How many people do you think you have to talk to maybe get one investor, or what's that look like?
Yeah, I write a lot of blogs. Well, I do one a week at least minimum, and something I've been wanting to write on, but I haven't yet. So I probably will now. Thanks for bringing that up. Is looking into the actual statistics behind accredited investors and net worth and like what exactly these percentages are and geographic locations. Is it more heavily centered over New York and California or what? But in my mind, it seems to be almost like 1%. So 1% of folks are going to have over $1 million net worth or very high income to qualify. Now, that's 1% of like just the general population, right? So you just go walk outside in the public streets and there's 1 out of 100. But you get into a conference and, it's skewed now, right? So it might be 30%, something like that. So a realistic expectation is to reflect off those numbers. Depending on where you are and, I guess how you're marketing and what environment you're in, just know that it is truly a numbers game. I mean, at bare minimum, I would say, 2 people out of 10 conversations might be the right fit. And that would be a great statistic if you could get to that point. So to be more realistic, right, expect, 1 out of 10, 1 out of 100 even sometimes. It just really depends. So, and that's why it really does take a lot of networking, right? And that it's not as simple as just create an ad and get investors, right? Get 100 people to opt in and they're all qualified. It's just not that easy in this industry. So, but it's all who you know, and sometimes it ends up as a referral. You're having the conversation about why I invest passively, and someone just says, man, that sounds really great. I'm not an accredited investor, but but my dad is. I've been trying to help him find some investments for his retirement or pre-retirement or whatever. And sometimes that's kind of how that evolves and goes. But yeah, I always think of it, just to be conservative, as kind of the 1% rule.
Okay.
I'm gonna have to have 100 conversations, and if I'm lucky, there's an investor in there. So
Yeah, that can help, I think, to go into it with that, because if you go in expecting to get 99 no's, then getting those no's aren't necessarily so discouraging. And then when you do get that yes, you'll be excited. But otherwise, I think it'd be pretty easy to, if you expect yeses every time, think every person's going to be an investor, then it'd be easy to get discouraged, wouldn't it?
Yeah. So my big philosophy of mine is the, under promise and over deliver, right? I do that both mentally, just personally. I do that when I project my, my financial stuff. I'm always trying to be super, super conservative. And then I like to surprise myself and go, wow, I did so much better than I thought.
Nice. Yeah, good plan. And so with the different events you go to, I would guess then that too, certain events probably have more potential passive investors than others, because I would assume some of them are a bigger percentage of people are there for the education and not looking for passive investing, whereas others might have more passive investors. Have you found that to be the case?
Yeah, for sure. So it is trying to, I wish there were better review sites online for conferences. There's really not. You can get on Bigger Pockets and ask around, but a lot of that stuff too could maybe be biased if someone's promoting an event. Mm-hmm. But yeah, you just have to understand the models. I mean, maybe I shouldn't name drop certain companies, but like there's one that's widely known out there where the first conference is free, which is very appealing, but it ends up being 100% sales pitch into like a $300 conference, which you think, okay, finally, this is the one. That ends up being a sales pitch to the $10,000 conference, but if you could just back up and know from the get-go, this whole thing's like a big pyramid thing, right? Then maybe that's not one you want to attend. Whereas this other one that seems expensive, it's $600 tickets. Wow. But there's no sales pitch. It's pure education and networking. And it's always been worth it to me. At those price points, I always get more value, $500 to $1,000 range, than what I pay for. And it seems crazy, but it's just true in my experience. So those are the ones I would seek out, or find someone like myself that goes to a lot of conferences and just, pick their brain. Here's my goals and objectives. Which ones do you recommend? I mean, I don't know everything, but I can share the ones I've been to. So.
Right. All right. Makes sense. And so when you go to events, I know a lot of people are kind of big about handing out a lot of business cards. How effective do you think business cards are?
It's a dying breed, or at least I hope it is. I don't know. It seems like the old school way of doing business. Business cards now are becoming virtual. So there's all these different apps, or here, let me take a picture with my phone camera of your business card or whatever. I don't know. I've experimented with different types of cards. I still carry them because some folks, especially older demographics, still very much like a business card. So I don't want to short them and say, oh, you don't have an Instagram, huh? Well, I guess we're never going to connect then. You don't want to limit your potential. So I put those little, QR scanners on the back, download a free resource guide here, that kind of stuff. None of it's really that effective. The one thing that is effective that I will point out, anybody, here's a great tip. Always put a picture of yourself on your business card, period. Because what I hate most is looking after a handful of business cards at the end of the day and going, John Smith, who the hell was that? I don't even know how to respond to that person. Also, what you might do, another cool thing I've done and I see other people do, is on the back of your business card, put a section for notes. Like leave somebody space to write, oh, this guy's a passive investor looking for, multifamily deals. And man, that goes a long way. But if you don't leave anybody any space, or you get these super glossy cards you can't write on, you just, you're not going to have that opportunity.
Right. That makes sense. And speaking of apps too, I know a lot of events use an app like Hoova, for example, before the event to connect with people. Have you found that to be effective, or how do you use that?
I've used Hoova at multiple conferences. It's cool. It's like any technology. It's still evolving. It's still getting better and better, and it can be effective. But again, back to the 65-year-old, are they on Hoova? Are they going to follow up on Hoova? Do you see them being on Hoova, for the next week, following up with people? Probably not. So, different strokes for different folks. I mean, everyone has their preference. So that's why you kind of want to do it all. You want to be on Hoova. You want to carry a business card. You want to have like a pen and pad note paper. I mean, all this stuff. You want to be on Instagram. You want to, and, so yeah, I mean, that's to increase your odds of follow-up and, conversion.
Okay. All right. Let's take a moment to thank our sponsors. When we come back, Travis will share the profile of a typical investor, which is different from what he expected. And he also shares how to cut the learning curve by decades if you're new to multifamily investing. So stay tuned.
Do you have a website that gives you credibility and captures leads? ApartmentInvestorPro.com can help you get a professional website today. Typically, building a professional website can be a real pain, taking thousands of dollars and months of your time. One syndicator said it took him 10 months on his own. Another had to go through 3 different companies before getting something usable. ApartmentInvestorPro.com makes it quick and painless. All the design and content is already created. With 15 years of experience building websites for investors, ApartmentInvestorPro.com gives you peace of mind and lets you focus your time on finding deals and investors. These powerful websites capture contact information from your potential investors. You can even automate the follow-up process. No more letting good investor leads fall through the cracks. Save 10% on your website by going to ApartmentInvestorPro.com and using coupon code PODCAST.
And so then what type of person would you say is typically looking to partner in a real estate private placement or a syndication?
Yeah, to my surprise, so I got started in 2015 with syndication investing. Prior to that was all single family. So my perception was, when I was first learning about it, was, wow, these people invest in apartment communities. They must be billionaires. They must be super experienced real estate people with like 30-year track records. I don't know what I'm getting myself into. Who am I? Come to my surprise, it's doctors, dentists, lawyers, attorneys, pro athletes, business owners, anybody making a good income, not living on 100% of it, needing a place to park some additional capital. They don't want to put it all into the stock market, for example. They're high net worth, high income, folks. And rightfully so. I was the kind of person who was trying to escape my W-2 job because I hated it. It was a high paying gig in the oil industry, but I didn't like it. But come to find out, again, there's a lot of people that love their jobs, and I'm so happy about that. and they're passionate about what they do. And that dentist doesn't want to take his or her eye off the ball and start fixing, flipping houses and getting involved with real estate and trying to spend their weekends up and down, trying to find houses to buy. Rightfully so. So yeah, that's the typical demographic, age 30 to 65, I don't know, somewhere in there, high net worth, high income, busy professionals, right? They're doing something else to make money, and they're just trying to build up residual passive income for retirement or just for supplemental income. Why not?
Yeah.
So that's mostly who it is.
Yeah, it makes sense. They don't want to leave their money sitting in a bank, not accumulating interest, or like you said, put it all in the stock market, something risky. Yeah, that makes sense. Okay, cool. And so then after an event, do you have a strategy for following up then with people?
Not really. What I try to do is the same day, as soon as I get back to my hotel or my house, I follow up immediately with people. If it was anything that was urgent during the conversation, I'll do it right away. So I'll say, oh, let me send you that, whatever it is. And then I'll go take a break and I'll go send it on my phone and make sure they get it so I don't forget. But just a general follow-up, like, hey, it was great chit-chatting with you. Feel free to reach out anytime. I do those as soon as the day is over, not the conference, but the day. And because by the third day, same thing, right? You're looking back at day one business cards. You're like, wow, Sally Sue, what? And I don't even know what to say to Sally Sue, and I feel stupid about it. So, so follow up as soon as you can. What's the other thing I do? I will usually, in the next 1, 2, or 3 days following an event, I will try to connect with as many people as I can find on social media, usually LinkedIn, BiggerPockets, sometimes Facebook, but that gets kind of weird because it's personal to a lot of folks. So I try not to intrude in people's lives that way. But but the public profiles, for business networking connections, whatever, I'll connect on there.
Okay, cool. And I know you mentioned earlier about how you suggested having space in the back of your business card to write notes. Do you typically write notes on the back of people's cards to kind of remember who they were?
I do. And and the other thing I'll do, if I don't have any room to write, I'll either take out my phone and put a note into it after I'm done speaking with them with my notes. And I'll just put first and last name, and then I can match that up to the business card later. Or I'll dog tag the business card, meaning this is a qualified individual looking to learn more. So I know to get to the dog tagged ones first, because that's going to be your most likely conversion. And if someone's truly just not the right fit in any way, they're just trying to sell me something or whatever, I'll usually fold the business card in half. And that pretty much just means throw away.
Right. Makes sense. Okay. It's a good system.
Yeah.
And so we talked a little bit about this earlier, but with COVID-19, some events were canceled or switched to online only. So what impact has that had on you finding new investors? Do you find is it slowed down the process for you, and how has that worked?
Yeah, I've really just shifted gears. I haven't done a lot of these online conferences. I've done maybe 2 of them. One had a Facebook group to network in. That got kind of salesy and cheesy, so I wasn't a fan of that. The other just had like no networking at all, which I really didn't like. And then I just kind of quit attending them. So hopefully they get better. Maybe they will have a Hoova or something attached. I don't know. But, I've spent a lot more time doing blogs, making video content. I launched an Instagram and a Facebook with the hashtag @PassiveInvestorTips, where I'm chopping up a lot of podcasts like this one and other content, and just making little 60-second snippets of self-education, how to get started, what passive investing is, yada, yada. And so that's been somewhat helpful. It's been a cool learning curve to learn that world. I'm not, a digital designer or anything, but it's been kind of fun to embrace in that. Okay. So yeah, that's kind of where we're at as of July 2020.
Yeah, trying to adapt still, I guess.
Yeah.
And I think that's probably something where a lot of these organizers events are having to see that too. They need to, because that's such a big part of those events is the networking. It's just not the same with an online event, at least the ones I've been to so far. So I think that's a a challenge all these organizers are facing, how to get that aspect in.
It is. And what's interesting is this week, in fact, my wife and I, we were originally going to a Tony Robbins conference out in California in person, of course. There are these big stadium shows if you've never been to a Tony event. And it's very interactive. It's very, hands-on, and everyone's hugging and clapping and jumping up and down. Well, it got canceled. It got postponed. It got canceled again. So now he's doing this huge online event, which is supposed to be this 3D immersive digital. You still interact with people via webcam. And I'm really curious to see how that goes, because that's actually the first major effort that I've seen towards making this happen, making real interaction happening, where you can just click on different people and, hey, how are you doing? Blah, blah, blah. In a lot of ways, that's actually better than a conference, because you don't have to butt in and interrupt people. And, it's just pretty easy to click a button and say, hey, how are you? So we'll see. It's a big experiment, but maybe this is like kind of the beta test for what the future could look like for online conferencing. And if it does work out, I'm all about it. I'm all for it. It's cheaper and more, efficient, but we'll see.
Yeah, I don't know. I saw somebody has an event coming up, and I think they're doing some kind of Zoom thing before the event, after the event. I could see where that could work. Maybe like if you do breakout rooms, for example, break people up into small groups or something, you could potentially meet people that way. But I don't know. Yeah, I'll be curious to see how that goes with the event you're talking about.
Yeah, I am too. I could see it working. I can kind of visualize this in my head right now, that you have this big screen and it shows all the people who are networking together. And then you have kind of like a wait room, right? These are folks not having a conversation, and you can just click on them. It's like, hey, Sally Sue, what's your story? What do you do? And I could see that working, but I don't think the technology's there yet, or it could be, but I haven't seen it personally.
Right.
So we'll see.
No, I haven't either with the online event, but we'll keep an eye out for that. Maybe there'll be some good ideas out there.
Cool. Yeah, I hope
Lots
so.
of opportunity though. So now maybe we could look at this from a little bit different perspective, because I know you said you invested passively with Ashcroft before you came on board to try to find investors for them. So if we look at it from the other perspective of you as a passive investor, how did you learn about Ashcroft, and what made you want to invest with them?
Yeah, good question. I didn't start investing with Ashcroft originally. So in 2015, I partnered with some local groups. I was out in Colorado at the time. And so I was in the middle of selling all my single family homes, trying to make a transition. Wasn't really sure if this was the approach I was going to ultimately take. I certainly didn't think I was going to be full-time passive the way that I have. But I partnered with some new groups doing their first, second, third, fourth deals, that kind of stuff, pros and cons to all that. But what it taught me is how important the sponsorship team is, because at the end of the day, you're really betting on the team to be able to execute the business plan on your behalf and make decisions on your behalf, and to be responsive and to be accurate and to be transparent. It's all about the team. And I failed to realize that. I was looking too heavily at the deals themselves and not at the team. And so it was a pain point for me to an extent. And I sat down to write down all my criteria that I want to be in B and C class, value add, multifamily, over 200 units, monthly distribution, these states, this, that, and the other, right? I made this huge list. And Ashcroft was just one of those teams I was introduced to. It was through one of my friends after a best ever conference, which is the one that Joe Fairless puts on every year in February. And spoke with Joe, super genuine guy, went over my criteria with them, just really great alignment of interest. Did one deal, waited to see how that would pan out, panned out great. So I said, okay, I'll do a second and a third and a fourth and a fifth. And, it's just progressed that way. But at the same time, they're one group that's been great in my experience, but, I do invest with a lot of other groups as well as an LP. So I believe in that type of diversification, both geographically and somewhat asset type. And then of course, sponsorship team. So yeah, that's how it came to be.
Okay, cool. And so I know you said you've invested in other people's deals too. And so what are some things that you didn't like about some of the other investments that you made, like ones that you decided not to invest with it? And again, like what?
Mm-hmm.
Yeah.
Yeah, it's again the sponsorship team, right? It turns out a few of these folks did a real great job up front to get someone into the gate, and then kind of failed to deliver immediately after and forever after. And so things like, giving them a phone call, I get voicemail, I leave a voicemail, 2, 3, 4 days later, I get a call back. Sometimes I don't get a call back. Sending an email with 3 questions, getting 1 or 2 answered, now I got to send another email, just frustration points. It's just, it's a people business, and it's a lot of personal preference on how, who you prefer to work with. I guess maybe I have high standards. So I've been let down by a few groups, but yeah, that was the bottom line. And some of the inexperience caused issues with the properties, because naturally, so if this is your first or second deal and you've never done this before, and you don't have a mentor, a coach, or anyone else to help you, a consultant, and then all of a sudden you have a flood on a property, or a fire, or vandalism, or this, that, and the other, you may not know how to handle it. And that, I get it, and that's fine, but I prefer to work with a group that's kind of been there, done that, so to speak, right? They've done 20, 30 deals, what have you, in the same sector, the same class, and they have results to show for it, good or bad, and you can kind of make a better judgment call that way. So not to say I won't work with newer groups, because I still do, but I do try to make sure there's somebody kind of there on the team that can bring that level of experience or help them out.
Right. Yeah, that makes sense then, to make sure they have like you said, a mentor or somebody that's experienced, that they can, it's not just a group of new people brand new to this that are not fully knowing what they're going to do, how they're doing it. So yeah, makes sense. Yeah. So, well, great. And so do you have any other suggestions then for meeting investors, or any other tips for that?
It's pretty, individual. Obviously at this very moment, conferences are really kind of out of the question as far as in person. There are digital conferences that are still getting better and better, as we spoke about. It really depends though. Are you there for the networking? Are you there for the education? And, that matters in terms of online. So they're great for education right now, maybe not for networking as much. Bigger Pockets has been great. I love that forum. Great, huge online forum. If you're not on there, just to network with real estate people of all aspects and all types. You can go and read blogs. You can get involved with different forums on different topics. And that's a great way to expand your network digitally also. And then just reaching out to folks again. I mean, not to keep like promoting myself, but people who are doing what you want to do. If you do want to passively invest, if you do have an interest in private placements or syndications or multifamily, reach out to the people actually doing it. And there's plenty of great books and resources and things like that. But I'm telling you, in the last 10 years of my experience, having a mentor, free or paid, having a mentor has cut the learning curve the most. I mean, it has saved me decades, literally decades, by having mentors. So again, I try to be that free mentor for people. I spend my weeks on these 15-minute free phone calls, these Q&As from podcasts or blogs or anything I put out there. If anyone has questions, wants to learn more, wants to network, connect with me, on a free 15-minute call. So yeah, that's it.
That's great. And just a quick question about like on Bigger Pockets, for example, do you initiate many like new posts, or do you typically go on and like reply to stuff that other people have started, or like what's your strategy with that?
Combination of both. So I'm just about to start getting more heavy back onto Bigger Pockets again. I kind of forgot about it, to be honest with you. I started with Bigger Pockets. I went to conferences. And then when conferences kind of went to a hold or a standstill, I went into social media. And I just left Bigger Pockets behind. And I realized what a great resource that is. And so I'm going to be going back on there I do blogs on there. I've never stopped doing that. So I got a lot of blogs, but I'm going to start commenting on other people's posts, posting my own topics. Both of those things are great. And what's cool about it is I could post something today about multifamily. Someone may not see that for 6 months. And all of a sudden I get a message out of the blue. Hey, I saw that post you made about multifamily, yada, yada. And that's really cool, right? So it's kind of an evergreen system if you're not talking about current events that are happening just today. And it can be a little timeless compounding, strategy to use.
Yeah, that's cool. And so is that with posts in the forum that people find later, or blog posts, or both?
Both, but mostly the post in the forum, because usually people have the same questions over and over, right? So someone will post today, single family versus multifamily, pros and cons, right? Well, then someone jumps on Bigger Pockets for the first time ever in 6 months and posts the same thing, or searches for that and says, well, I wonder about single family versus multifamily. So that's how it works, right? You have these common high level topics that are timeless. I mean, people are going to debate the pros and cons of that forever. So it's kind of nice to get into those forums and less about the, how do you think the July 1st rent collections are going to go? Because nobody cares in August,
Right.
And no one's going to be looking at that in 5 years because nobody cares.
Yeah, that's right. And one cool thing too is, like, if somebody searches on that certain topic and they find your post and they post a reply on it, if I'm not mistaken, I think it kind of brings it back to back to the, where other people will stumble across it too. I think, and it brings it to the top of the list because it's kind of been reactivated in a sense. I'm not 100% sure on that. Do you know?
They have an interesting algorithm. I mean, it's kind of a common sense algorithm, unlike Instagram and Facebook. People rank your posts. So if you just give a generic answer, single family versus multifamily, oh, multifamily is the best. No one's ranking that post. You know what I mean?
Right.
But if you sit and you give a thoughtful response that's maybe 2 paragraphs long, you're going to get a lot of votes. Like, hey, that was really helpful. That was very insightful. I learned something. And so the more votes you have, the more exposure you have on the platform. And you have all these stats that are attached to your name. So it says this person's posted 1,000 different comments. They've gotten 10,000 votes. So now hey, that person's kind of credible. A lot of people like what they have to say, versus the person with 5 votes and 1 post. It's not that great.
Right. Okay, that makes sense. Okay, cool. Well, that's awesome. Yeah, thanks for sharing all that. And so, anything else to add that you can think of for networking, or any other tips? Or
well, if any of your listeners want to connect with me, it's ashcroftcapital.com/connect with Travis. And on there, actually, I have 2 things. I tried to make it a little more, one-stop shop. So either A, you can set up a 15-minute phone call for free. Happy to have a Q&A, discuss your goals, your situation, what you're after, see if I can help you. 2, if you don't want to have a call, or both, you do. Plus, I have a downloadable PDF guide. It's called Understanding Real Estate Private Placements. It's got industry terminology, how to vet deals and sponsors, questions to ask a sponsor, all sorts of stuff. Again, a 20-page free PDF. So get both of those at ashcroftcapital.com/connect with Travis.
Okay, awesome. And you mentioned earlier too that you write blog posts. Are those on that, in that area?
They're not on that specific landing page. You can find me on Bigger Pockets for my blogs, and I usually repost those on LinkedIn as well, sometimes on Facebook. So, just connect with me on some outlet and I'll point you in the right direction.
Okay,
if
cool.
you don't find them.
All right, sounds good. All right, well, thanks so much for coming on today. I really appreciate it. Thanks for sharing your insights, and we'll look forward to connecting with you soon.
Appreciate it, Todd. Thank you.
Thanks for listening to this episode of the Apartment Investor Pro podcast. Be sure to subscribe to get the latest episodes. Also, visit our website at apartmentinvestorpro.com and connect with us.